Trading at Schwab is now powered by Ameritrade, bringing you an expanding library of education with even more ways to sharpen your trading skills. Access new online courses, insightful webcasts, articles, engaging videos, and more, all curated just for traders. Plus, guided learning paths with content designed to fit your unique interests. No sifting to find exactly what you need, so you can spend your time learning to trade brilliantly. Learn more at schwab.com/trading.
How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Your next product launch is coming fast. Don't let billing slow you down. Legacy systems can't handle usage-based billing. That means your team is stuck gluing code together, piecing through spreadsheets, and running ad hoc queries just to figure out what to bill. With Metronome, you can roll out new pricing in minutes instead of months, whether it's usage-based, seat-based, or a hybrid model. Visit metronome.com to see how companies like OpenAI and Anthropic launch billing as fast as they launch products. That's metronome.com.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Shares of Netflix down to the company forecast revenue for the full year. The guidance met the average analyst estimate, but operating margin of 28% came in below Netflix's guidance of 31.5%. That was due, the company says, to an expense related to an ongoing dispute with Brazilian tax authorities that was not in our forecast. Is that what has investors not so happy?
I don't know. It feels like a one-off, but I don't know.
They say it's a one-off. The company says that, we don't expect, what did they say? In the press release, they say, we do not expect this matter to have a material impact on future results.
Yeah, all right, got it. But investors are sending the stock down about 6%. Keep in mind, the stock has had quite a run this year, as we mentioned, up almost 40% here in 2025. So investors maybe expect a lot out of it.
Well, let's bring in Felix Gillette. He is the man who knows about media. He's Bloomberg News media entertainment editor. He's also the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO. Which, yes, we're going to be talking about HBO in just a minute. He does join us here in the Bloomberg Interactive Brokers studio. Going through the results here, look, as Lucas pointed out earlier, this is a $500 billion company. Expectations are high. Yep. Everybody kind of looks to it. Is the reaction that we're seeing because of this one-off from the Brazilian tax authorities?
It seems that way, although, again, it's a crazy time in Hollywood. Taking a step back, there is competition coming from everywhere, YouTube, Twitch, AI, new AI services. But, if you take a breath, you look at the third quarter slate, they had incredible engagement across the board. They had K-pop Demon Hunters, the most popular movie in the history of the service.
325 million views, it says in the press release.
New Squid Game episodes. You jump on there now, you got new Wednesday episodes. The franchises are all doing really well. At the same time, all these investments they've made in live programming, WWE, boxing, all of that is starting to really pay off. They're going to have their first NFL games coming this Christmas. So, I think from a strategic programming platform, you have to say that things are going well for Netflix.
I mean, yeah, I'm looking at, I guess they're talking about one fight here. Was it the Alvarez and Crawford fight or something?
Alvarez. I know that Carol was up all night waiting for that.
I was totally up all night. I was not up all night. But it said across Netflix's social channels, the fight generated over 950 million owned impressions. So it's a lot of momentum. Having said that, there's lots of competition. I know when I'm looking around for things to stream, sometimes I stop on Netflix, sometimes I don't. I mean, what is it that it needs to kind of keep doing in terms of the momentum? Is it, Felix, all about the spend and making sure their IP and their content keeps bringing in the eyeballs?
Yeah, and making sure that the churn rate stays low and that people looking forward think that there's something coming down the pipeline that they need to stick around for, because it's so easy to bounce in and out of these streaming services now. You watch a show that you love, and then you kind of binge watch, and then I'll cancel that one. I'll pop over to the next one, subscribe to that, watch, cancel. And yeah, Netflix, I think more so than the other streaming services, has done a good job of making sure that there is this steady drumbeat of, oh, you got to stick around because Wednesday's coming back. Oh, you got to stick around because Stranger Things is coming back.
It's brilliant. I mean, it's an easy service to cancel. They kind of pride themselves on that, but there's no reason to cancel if you want to watch that next thing. I promise we talk about HBO because my mind was blown a little earlier today when we got a report from Lucas Shaw and Kelsey Griffiths that Warner Brothers Discovery is in the running for Netflix, which is a little bit of a surprise to me, given what we heard from Greg Peters, that they're builders, not buyers. But Lucas made the point to us on our air in the 2:00 hour that maybe they could carve it up a little bit and they would get the studio. And he made this comment that they might not even take HBO and they just feed HBO's programming.
Right.
And I was like, that's a crazy world that we're living in when, like, less than a decade ago, you had Reed Hastings saying, we want to become HBO faster than HBO becomes us.
Yeah.
And now they are the media giant. They are the incumbent.
Yeah. And meanwhile, HBO's parent company has been staggering through one, M&A deal after another, and they haven't worked out. And so once again, we're talking about who's going to buy Warner Brothers Discovery's assets. And today they're saying, well, we have interest from multiple parties. We were going to reorganize the company, and these two, one part of the company would be focused on the studios and streaming. The other part would be the TV networks. But maybe, we'll be open to different possibilities, including potentially selling parts instead of the whole. And yeah, I think Netflix clearly wouldn't want to be owning a bunch of cable networks. They don't want to own CNN. They don't want to get into that business. But would they take a look at the library? I think due diligence you have to, because Warner Brothers Discovery still has one of the biggest, richest libraries of IP in the world. They have Harry Potter. They have, the Hobbit universe. They have DC universe. They have so many different things.
What would happen if you had walked into Richard Plepler's office 10 years ago and said, Netflix could buy you?
Yeah, he'd have a stroke. I mean, this is just like,
this is a crazy world we're living in.
It's been very topsy-turvy, and, Netflix star has risen to the point where, they're the dominant streaming service, and they're in control, and they can kick the tires on the entire company or whatever bits and pieces.
Is this AOL Time Warner happening all over again or something? Or no, we've learned.
To go through the whole history, now we have AOL Time Warner, we have Time Inc., Time Warner Inc., Warner Media, AT&T, Discovery.
I
mean,
know.
it's just, you have to, it's a whole alphabet of different companies that have now been in charge of this.
Is content still king?
Yeah, but it's king for 5 minutes, and then the next thing comes down the pipeline. You have to. It's just endless. You can never rest.
Is Netflix a good indication of the U.S. economy? Is U.S. Netflix penetration? Is it discretionary in your view?
I think that it's proven that consumers are fairly willing to pay more for it. They've been raising the prices, and people haven't been canceling. Which is, somewhat a good sign for Netflix. The demand has proven strong regardless. And I see that in my own house. It seems like Netflix has become kind of like the base one you keep, and then you cycle in these other ones as sort of these ancillary add-ons. And I think that's the position that Netflix has wanted. And that's the position that HBO enjoyed as the first mover premium cable network for decades. It was always, you get HBO, and do you want Showtime or Cinemax, or do you want one of these other services? Now Netflix very much has that primary foundational position.
That just seems so sweet, and it wasn't such a long time ago. Felix, do not go anywhere. Let's bring into the conversation Mark Douglas, founder, chairman, president, and CEO of the publicly traded $1.2 billion market cap advertising and marketing company Mountain, joining us here. Mark, come on in. Good to have you back with us. Carol Masser, Tim Stanovic, and Felix Gillette, all of Bloomberg here. Walk us through what you see as interesting from Netflix as the stock continues to be under some pressure here in the aftermarket. Let me just bring it up on my Bloomberg just to update everybody. It's down about 4.3% here.
Yeah, well, I think obviously investors are reacting to the slightly mixed earnings results, but the industry as a whole right now, I think, is in its entirety is a bit in a transition. We are fully moving into streaming is the dominant form of ad sales in the industry, meaning the Disney's, Netflix, of course, because they're only streaming and things like that. Live sports is becoming a really big deal, something that Netflix is dabbling in a bit. And so I feel like right now there's just a lot of the same, and it's just execution is the key word. You're not going to see a bunch of big announcements. You're just going to see everyone focused on growth. I also think the potential to acquire Warner Brothers Discovery is very interesting. And I think the value of Discovery is possibly being, underestimated, and what Netflix could do with all the Discovery content and essentially reignite a lot of that content.
So, Mark, do you think Netflix should do it? Should Netflix buy Warner Brothers Discovery, or at least parts of it?
I personally think it would be a terrific move. I mean, I don't know if that means the end of, CNN period.
Well, like CNN, remember they're carving off the live TV portion anyway in this, a potential spinoff at this point. So they wouldn't have to buy it all. Our reporting has
just
indicated,
fantastic assets there. I mean, White Lotus and the Dragons and almost the entire Discovery catalog that can be not only turned into content people still love to watch, but whole new seasons of content, and probably at a discount in terms of the purchase price. I think it makes a lot of sense for Netflix and really anyone. I think Warner Brothers Discovery is honestly, and I know a lot of people there, so I hope they're not going to hate me, but it just hasn't been managed well. The assets were there to turn that into a true challenger, and it just, continues to do reasonably well, but not, I think, where it should have arrived at this point.
Felix, come on back in here. You wrote the book on HBO. Yeah. What have been the missteps at Warner Brothers Discovery? Is it? I mean, how much time do we have? But is it
chapter?
Is Mark? But in your view, is Mark right that it was about the running of it rather than about just the challenges of the industry?
Yeah, I think it's been a bunch of different factors. I think, as you remember, the deal, there's been just so many deals that have gone through this company and so many reorganizations, and it makes you dizzy when you think about it. I think in terms of the assets, on paper they look amazing, but the idea of just, piling a whole lot of different assets into one service, they thought that adding all the Discovery shows was going to be great for HBO Max. As you recall, they changed the name of the service to Max. Well, we're broadening it out. We're going to have something for everybody. And then it turns out that a lot of that programming was not compelling to the same audience. People didn't want the lean back programming. And so, a couple of years into that, they say, we're going to get rid of some of that Discovery reality programming from the service. We're going to go back to naming it HBO Max. So sometimes I think you have to be wary of this idea that more is always more in the streaming world. The assets have to make sense. Yes, Netflix has built kind of the Walmart of streaming. It's something for everybody. But even so, they've been very cautious in their approach and doing it, step by step, adding things in slowly. And, you've seen them lately making this deal with Spotify where they're now going to bring podcasts onto Netflix. And, they've been trying for years to get some sort of topical comedy show working. Everything they've tried has failed. And so this will be another opportunity for them to try that. Adding everything from the HBO and the broader Warner Brothers library onto the service at once could be a little bit overwhelming. So, again, the cadence of how you roll these things out is very important in the streaming world.
Mark Douglas, you have a front row seat in terms of the advertising market when it comes to certainly these streaming companies. I mean, what does it look like right now? Is there demand? Is there too many places to put it? Give us some size and scope here.
Well, there's once Netflix and Disney Plus kind of came in the market, and of course Amazon Prime, it created a surplus of inventory, and it's created downward pressure on prices. But overall, I think the big thing that affected Netflix, to go back to them, is they came into that market thinking that we're going to get Netflix prices, which for advertising are not like the consumer prices. They're like, they wanted the highest prices in the industry to advertise on Netflix, and that essentially got rejected. And that the advertisers, the big agencies, said, look, we want to be on Netflix, but we're not going to pay Super Bowl prices to do it. And so Netflix had to adjust. They had to reboot their ad effort somewhat. They've teamed up a bit with Amazon. And I think it's still going to grow, and I think they will do well, but it's definitely taking longer than I think they thought it would. But I would still bet on it long term, that if you take their continued growth in subscribers, I believe still more than half of the new subscribers are ad supported, that they will figure out how to monetize that. And that additional growth vector will keep them growing for a very long time. And I still think, I said last year, I think Netflix, it has the potential to be the first $1 trillion media company. I still firmly believe that.
Mark, are there any particular demographics for Netflix in terms of the advertising that they could still get better in? We're talking about how it's a very broad service at this point, kind of all things to all people. Is there any piece of that that they're missing?
Not really, because the advertising's not done that way anymore. It's audiences, but the audiences are no longer, women in this age range. The audiences are people shopping for particular type of products, and they have so many people watching Netflix that there's an audience for everyone. The biggest challenge Netflix is having in advertising is the industry has moved fully programmatic. The ad sales are nearly fully programmatic. The ad sales are not done over the phone anymore. There's not linear bundles or anything like that. And Netflix is playing catch up in that game, where they're building their own ad stack, moving off the Microsoft ad stack that they initially teamed up with Microsoft on, and it's taking time. And so they're losing out to a lot of the more targeted advertising on television because they're playing catch up. But once they get there, I think you'll see their revenue accelerate very, very quickly in terms of their ad sales. And that's going to probably post some really outstanding quarters when they do that.
Hey, Mark, from what you are seeing, though, about ad sales and how it pertains to Netflix specifically, I'm not quite sure how much you can drill down with what you are seeing and the data you are seeing, but does it give us any indication of about how well Netflix is holding on to its audience in the U.S. globally? If it indicates anything about churn, is there anything that you can glean from that?
I get the question. I don't think so, because less than half of their users, the newest users are more than half, but less than half the overall customer base is ad supported. I think quite a bit less than half. That'll change over time. And then even with them, they don't have high ad loads. So just because they're not serving that many ads, given the number of people that have signed up to receive them. So it's a bit of time away before, and they're not fully programmatic, where that data is just literally streaming out. To give you some concrete numbers, we received 4 million ad requests to buy a TV ad per second at Mountain, and Netflix is nearly zero in that, because they're still doing the sales kind of like calling the brands and not doing it in the new way, which is it's all electronic. It's like the move on Wall Street from having traders to being, fully electronic trading. Netflix hasn't gotten there yet.
Yeah, I'm just looking through the press release. The company says we've come a long way in building our advertising business in less than 3 years. In that time, we've gone from 0 members on our ads plan to achieving sufficient scale in all 12 of our ads markets. We'll continue to grow from here, building out our ad sales and operations team and enhancing our capabilities for advertisers, including launching our own first-party ad tech stack, Netflix Ads Suite. Will that Mark, change things?
That's the change. That's what we're waiting on. And that will help the monetization. And really nice thing to think about is someone, deciding whether you should invest in Netflix or continue. That is like password sharing, and the analogy, I mean, in that it's a backlog of revenue. When that releases, it's going to unleash additional revenue. So they have this growing backlog of users that's saying, hey, I'll get ads, just give me, but they don't have the ability to serve them as fast as people are saying they'll receive them. When that catches up, that's like a whole new growth vector for the company. That's like and you're going to see that, some really nice quarters, the way we saw really nice quarters when they got a little stricter about the passwords.
So, Felix, you have been covering the industry for long enough to remember Netflix saying, we're never going to do ads, we're never going to do live content, we're never going to do sports. Of course, it's done all those things and kind of excelled in most of those things.
Yeah.
What has Netflix not done yet?
Well, I guess the acquisitions, right? To circle back to where we started.
Yeah. I didn't see anything in the press release about that.
Let me do a quick search for Warner Brothers. Nothing in there.
I mean, is that what everybody's going to talk to? I mean, is that what everybody has to talk to on the call, or what?
I mean, I think that's a big point of discussion at this point. Would they go out and buy a big library? Again, they've said for years that they wouldn't do that. They have been building their franchises themselves, and they've done a good job at that. But there's a lot of franchises out there for sale right now, and would they take a nibble? We'll see.
I mean, I don't know, Mark, last thought question to you. I mean, we're waiting for the call with investors and analysts, like what's going to come up on a day where we're trying to figure out what happens with Warner Brothers Discovery. Is that what's top of mind for you with this company?
Like I said, I think they really getting the ads to monetize at the level at which they're signing up users to receive them, I think is the number one thing as an investor that I'd be looking for. But I think in terms of content and whether they should buy content, you heard my opinion. I think HBO Max just has an incredible catalog of shows that they can feed their audience and actually expand, like reignite and build new episodes. So I think that is the best property that's outside of like Disney and Netflix. Like is HBO, is Warner Brothers Discovery, but I always think HBO Max, HBO and Discovery Channel as the two premier properties there.
Mark Douglas, founder, chairman, president, and CEO of Mountain, joining us from Miami. Also a big thank you to Felix Gillette. He's Bloomberg News media and entertainment editor. He's also the author of It's Not TV, The Spectacular Rise, Revolution, and Future of HBO.
All right, so let's get to it with our own Bloomberg Intelligence senior media analyst, Geeta Ranganathan. She's at BI headquarters in Princeton, New Jersey. Take it away. So tell us what we need to know. And why is the stock really down? Is it because of that one-time charge?
Absolutely, Carol. So operating margin is now the new metric by how investors kind of look at this company. We've seen just a tremendous increase in the way that they have kind of grown their profits, in the way that they've expanded their margins. It was up over 600 basis points last year. We were really expecting them to actually exceed their guidance for both this quarter as well as to take up guidance for the full year. So this kind of really throws cold water on all of those expectations. And overall kind of looks really, really underwhelming.
What's the biggest thing challenging the company right now?
I mean, the biggest thing I think, Tim, over the past few months has really been, the growth of AI and whether that's going to be a headwind or a tailwind for Netflix. I think we've all kind of finally come to the, conclusion, at least in the near term, that it's going to be more of a tailwind. We've seen Netflix kind of really lean into AI, whether it's using a good user interface, whether it's improving that, or using, AI for, even more and better content creation. So I think definitely in the near term, don't expect it to be much of a negative. But then, I think over the longer term, that's going to definitely be one of the concerns out there. For right now, I think what investors are are really looking to, and we need guidance, more guidance from Netflix management on this. There really wasn't much spoken about this in the newsletter, was, anything related to advertising. They talk about doubling their advertising revenue, but again, there are no concrete metrics. There was no update in terms of monthly active users. The last time we got an update from them was in May. We really don't know what the number of subscribers are on the ad tier, or even what the revenue is. And I think that will definitely give investors some cause for concern.
Yeah, they talked about ads, I feel like, in the press release, but yeah, it sounds like we need a little bit more concrete. Hey, 30 seconds, Geeta. Warner Brothers Discovery, do you think Netflix should do something? And forgive me for just asking for you to be brief.
Yeah, I know. This is a little bit of a head scratcher. So I really don't think this is a make or break for them, Carol. Yes, it would be nice to have. Do they absolutely need it? No, not at all. So again, there's a lot they can do with it, especially the studio lot and, all of the IP. But again, I don't think it's do or die.
As always, looking forward to reading your research. Geeta Ranganathan, thank you so much. Bloomberg Intelligence Senior Media Analyst with the breakdown and what you need to know about Netflix. For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast. How can you free your team from time-consuming office tasks? Amazon Business empowers leaders to not only streamline purchasing, but better support their teams. Smart business buying tools enable buyers to find and purchase items fast so they can focus on strategy and growth. It's time to free up your teams and focus on your future. Learn more about the technology, insights, and support available at amazonbusiness.com.
Did my card go through?
Oh no.
Your small business depends on its internet. So switch to Verizon Business. And you could get LTE business internet starting at $39 a month when paired with select business mobile plans. That's unlimited data for unlimited business.
There we go.
Get the internet you need at the price you want. Verizon Business. Starting price for LTE business internet, 25 megabits per second unlimited data plan with select Verizon Business smartphone plan savings. Terms apply.